Hey everybody, it's Julia Jordan, your favorite real estate agent. I'm coming to you with some good news. It's Thursday, it's a great day to buy a home, so that's what I did. I bought another home. We bought one last week. We went under contract for a cash property. The house is so messed up, you can only buy it in cash. Today I have one that is not as messed up. It's a little bit ugly, but not really bad. We are offering just around 200,000. We are bringing in cash to the table 20%, so 40,000. We're planning to fix up for around 10,000, just a little bit paint, granite counters, little things like that. So if you run your numbers and you do financing, it ends up to be 757 every month for the mortgage. Sorry, I have to look up at my notes. Tax, HOA, all the regular expenses are adding up to 1,800 a year. It's not very expensive. The property will lease out for 1,700. Our total expenses will be just under $1,000, so we have 732 cash flow every month. You know, in real estate, there are 4 ways how to make money, right? Most people think about cash flow. I personally often think that is not the most important for most people. Most people should be more focused on tax deductions. You want to get your taxes down. But I break it down for you. Appreciation is one of those 4 points how to raise value. So over the years, real estate usually always goes up. 2008, we had a little dip. And then after 3 years, it continued rising as if this never happened, okay? So even if right now we are facing times where the economy is shaky and the value, honestly, we cannot really promise where the value will be next year. I have my personal assumptions, but of course I don't have the crystal ball and I cannot tell the future, but I do not expect really like a loss in value. So appreciation, let's go low with 5% a year. That would be over the next 10 years without compound interest, $100,000. My other properties appreciate between 7 and 12%, not counting the last year. The last year, many properties had 30, 40% appreciation, but the last year was a little bit out of the norm. So I do not take that as my future average, okay? Then we have tax deductions every year of around $10,000. So it is not directly in my pocket, but it is raising my net worth, so I do calculate that. I'm sorry, little notification. Over the next 10 years, the tenant will also down pay my mortgage, and it's quite substantial. It is a regular mortgage, 20% down. I right now will most likely finance with 3.5% interest rate. Maybe your interest rate is even better. A lot of people have a better score than I have because I finance so much. So the down payment of the mortgage is the third income stream with rental properties. That will be over the next 10 years will add up to $40,000 that my tenant pays off my mortgage. It's basically also raising my net worth, right? And then I mentioned the cash flow, 732 a month multiplied by 12 is 8,784 a year. That is a good income raise, right? That will be passive income except the faucet starts dripping and then I send out my plumber and get it fixed for $100, $200, something like that. But if you stretch it over the next 10 years, it is already $87,840. So that already is a difference, right? And 10 years, go by quickly. Also, I raise my rents for all my properties about $50 to $100 a year. When you calculate that in, we are already having a cash flow of about $100,000 over the next 10 years. Not so bad, right? Good purchase. So then the next thing is we buy the property for 200. Then we do a little bit of fix up. I told you I go in with a mortgage. In case I recognize that I have too much money stuck in that deal, right? I have 10 in there and I paid 40 down. Hey Dustin, thanks for watching. Hey Todd. What I can do is a cash out refi. So I call my lender and I say, look, I have too much money in the deal. I want to refinance. Takes about 30 days, cost me about $4,000 or $5,000 depending on how old the documents are. If I do it right away, maybe I get away with $2,000 or $3,000. And I say I would like to do an 80% cash out. Let's say the value should be $250K. after what I do to the property, okay? When you calculate 80% of that, I would do a $200,000 cash out. You remember the $200,000 and 10 for fix up? I basically have only $10,000 in my deal, and I appreciate and have my tax deductions on almost none of my own money in there. If the value is just a little bit higher, 260, I would get all my money out and multiply on 0. So that's infinite return, and that's actually what you want to achieve. If you don't get there in every deal, it's really not a big problem. You still have all the 4 income streams, paying off the mortgage, tax depreciation, what was it? Down payment of the mortgage and cash flow. So all 4. It's still a very, very good deal. I'm excited I get it. Just got the information in my email that they closed the deal. So in 2 weeks, I bought 2 houses, and you know, Handsome and I, we just got started. My CPA, she did my taxes, and she told me I have to send a check just for the last quarter of almost 10K. So I don't like that. So if I buy enough real estate this year and blow some cash at it, I can most likely get all of that back. And that, of course, would be the ultimate goal. Okay, if you guys have any questions, call me 832-444-4923. JuliaJordanRealEstate@gmail.com. If you think I am such a great wife, bringing us such great tax deductions and cash flow home, that I should receive a BMW X7 by Christmas, please post buy her the Beamer for Christmas in the comments. That would help me a whole lot. Shannon could deduct it as a business car or something, right? Happy wife, happy life. Okay, if you have any real estate questions, reach out. Always feel free to call. Don't ever think you steal my time. I love talking about real estate. Don't forget to post about the Beamer, okay? Thank you guys. Bye. Have a great day.